A few months ago, we made a video called the 9 EMA trading strategy. It was very well received. If you watched that video, thank you very much. In this video, we're gonna make that approach a little bit better. We're gonna optimize the 9 EMA. We're gonna do that by telling you how to maximize your trade location using Fibonacci retracement tools. Swing risk reward in your favor, make money over the long run. It's an easy game. All right, let's get to it.
Fibonacci retracements are fantastic tools for measuring trend strength and building tradable support and resistance levels. It's easy to construct a Fibonacci retracement sequence. For a buy, connect the most recent swing low to the most recent swing high. For a sell, connect the most recent swing high to the most recent swing low. Now we have a set of tradable levels. Improving your entry points using the Fibonacci retracement tool and the 9 EMA trading strategy is simple. First, we want to locate price action with regards to the EMA. If we're above the EMA, we want to be looking to buy. If we're below the EMA, we want to sell. Remember, we're trying to buy or sell pullbacks and price action. We're not trying to anticipate a breakout. Secondly, we want to identify our swing highs and our swing lows. Third, we want to draw our sequence and decide on our tradable levels. In this case, we're looking at a buy setup. We want to connect the swing low to the swing high, and there we have our sequences coming into view. I recommend 38, 62, and 78% retracement. Last, you execute your trade. Once it comes to your level, when it approaches the level, you're looking to take the trade. All right, let's take a look at a buy and a sell example and get you up and running with improving your trade locations. Okay, let's go ahead and work a sell here using the dollar Swissy on the 4-hour time frame. 4-hour, great time frame to trade Forex with. First thing we do is locate price. You'll notice that price is beneath our 9 EMA. That means that we want to sell a pullback and get in on that bearish pressure. Second thing we do is identify our swing highs and our swing lows. May seem a little daunting at first. With some practice and a little bit of time, you will get very good at identifying swing highs and swing lows. You'll be seeing them in your sleep. Third thing we do is we draw our Fibonacci retracement sequence. Right there, it's a sell, so we're going to connect our swing high to our swing low, and that's going to give us our tradable levels. My favorites are 38, 62, and 78, but a lot of Forex traders love 50%. The call is yours. It's up to you which one you want to target. Maybe you want to target all of them. You just got to wait and see how your own strategy progresses with your experience in the live market. For this example, I'm going to go ahead and target one of my favorites, 38%. That's going to give us a real strong trend indicator and entry on potentially a really hot bearish trend. Now, one thing before we roll our replay function and show you how this trade develops, look at our traditional entry. Our traditional entry is going to be on that negative bar close, and that's going to be around 91.04. Now, our stop loss is going to be the same no matter where we enter the trade at. It's going to be right above that swing high, somewhere right up around 91.97. So if we do get our 38% sell right in that vicinity, we're gonna beat this entry point by about 25 pips. That's fantastic. That reduces our risk on the top side and potentially really skews that risk reward, that dynamic in our favor. So I'm going to go ahead and I'm going to put my order entry just in front of the 38. Now I recommend shading entry a little bit. On a sell, you're going to put it below your Fibonacci level. My rule of thumb is about 3 ticks, 3 to 5 ticks. But if you have a great big range, you can go a little bit more than that. Just don't get too aggressive or you're gonna give away too much of your edge. Okay, let's go ahead and run forward in time and see exactly what happens with this trade and what we're targeting. And that's absolutely perfect. Right there, you're gonna see that we hit our 38% and now we're going down to get paid off at really whatever we want. It could be a fixed risk versus reward. We could just be waiting until price crosses back up over the 9 EMA, or we could be aiming for maybe a market structure, maybe a historical level. So that's a good illustration of a sell using this dollar Swissy 4-hour chart. These Fibonacci's can really help you optimize that risk versus reward. Okay, let's look at a buy. Okay, let's run through a buy example. You'll notice we don't already have it diagrammed, so we're gonna have to do the thinking on our own. Run through our progression. The first thing we do is identify where price is with regards to our EMA. It's above. That means we want to buy a pullback. The second thing we want to do is identify our swing low and our swing high. Third thing we want to do is connect those and draw our tradable Fibonacci levels. Okay, we've got our range. We are now ready to trade. We've got our range, we've got our tradable levels, we've got our finite stop out point, which is absolutely imperative. It's beneath our swing low here. So no matter what happens up here, where the bars close, where we hit our levels at, we've got our stop out point. All right, now you can see we've already tested that 50% level, so the choice on this one really would be yours. You could buy the 38, buy at market. You could buy the 50, buy the 62 or 78. If you wanted to reduce your risk, you'd wait for a deeper pullback. Now, it's going to be a less capital outlay, but you are going to be going against price action. But remember, we've identified that initial trend, and we're really looking to get continuation on this trend after a pullback. So for me, I would be looking at 62 or 78. I wouldn't even worry about 50 here. So let's go ahead and move forward in time and see exactly what happens in the market. Now, you'll notice a little bit of compression in this 30-minute gold chart, and then the market absolutely sort of falls apart right there. A big downturn. We go to 62%, we go to 78%. Either one of those entries are pretty darn good, because take a look at where your finite stop out point is. Your initial stop, if you took 78% here, it would be 28.59 and 28.55. That would be about a $4 risk, and the potential upside here is absolutely huge. So if we roll forward in time, you can see the gold market sort of does rally, gets back up above that 9 EMA, and just absolutely takes off. So remember, the whole idea behind this is to get with prevailing price action and really skew that risk to reward in your favor and put you into trades that you can win, not just a little bit of money, but a lot of bit of money. And remember, it's all about consistency. If you like 38s, play 38s. 50s, play 50s. If you want to wait for deeper retracements, play for the 62s and the 78s. There's absolutely nothing wrong with that. Build your stats, build your strategy, figure out how to make this profitable, because it can really make you a lot of money in a hurry, especially if you hit maybe one of these big moves like we just saw here.
The key to being profitable in the markets over the long term is playing the games on your terms. Using that Fibonacci tool to help you refine your entry point and improve your trade location is one way to do that. It's all about flipping risk reward into your favor. That approach, Fibonacci's with the 9 EMA, can help you dramatically. Now, if you're interested in getting started trading today, check out our partner broker, switchmarkets.com. They give you market access to all your favorite products. Also, head on over to How to Trade. Check out a live stream. I trade the 9 EMA live, and we'll be using that Fibonacci tool that we showed you in this video. Okay, Switch Markets, howtotrade.com. Follow, like, and subscribe, and we'll catch you on the next one.